And let's start with the trade tensions. Is there anything more than headline risk here? Is there anything substantial to take away from the latest news flow?
Yeah, I mean, I think one thing that you need to put into context is that we're coming from very frothy valuations levels. So the past couple of days of trading action that you've seen, it makes sense that you're getting some kind of a sell-off on this news. Now, we can't say a lot about the headlines going back and forth. We know that that's kind of causing whipsaws within markets, but we can say is that there have been broad exemptions. And so when you think about the country level, those broad exemptions apply to Canada and Mexico. So Canada has an effective tariff rate. That's something like 3%, so that's quite low. Whereas somewhere like Europe, the tariff rate is quite high. There aren't exemptions. You're also having a very expensive currency. And so the worry then is export competitiveness. Now, on the sector level, there are broad tech exemptions. So as we head into earnings seasons, and it's more likely that the tariff impact is delayed rather than avoided, you need to think that they might not come for tech, the powerhouse of the U.S. equity market at all, because of those exemptions.
Can we talk about France for a second? Should I expect a different outcome this week to all the outcomes that have come before, which is we get a new government, new prime minister, we're full of hope. We're getting a second sort of go at it with Le Cornu, the current prime minister, and we get a budget over the line. Is that a realistic prospect this week?
I mean, it certainly could happen, and that is actually...
That doesn't sound positive.
Well, that's your best-case scenario, right?
Yeah.
And in that best-case scenario, you still have a debt sustainability problem. It's not like you're going to have fiscal deficits.
So there's a hangover that comes with that.
Yeah. Exactly. And so you need some kind of premium in OATs, and you need some kind of premium in the euro. And I think the issue is the market thinks the ECB will backstop the French bond market regardless of what happens. And, you know, there's a TPI instrument, but there are conditions on that instrument. We also haven't tested how far the ECB is willing to let spreads go. And, you know, if you have something like Macron resign, you could very well see that limit tested.
I don't see him resigning. No one tells me that they see him resigning or the ECB intervening unless that spread was over 100
he has a history of wild moves, though. Calling that election was unexpected and devastating.
That's true. I won't rule out surprises in French politics, but I take French politics and raise you Japanese politics because we're seeing some pretty wild moves out of the Japanese politics. And I do wonder whether that's more because of the collapse of the LDP coalition or more because of the worries about US-China, Skylar.
Yeah, I mean, I think there's just a lot of mess going on. And so when you're trying to kind of parse through what's happening, there's something that you should probably keep in mind. Regardless of who's actually going to govern Japan, the issue is inflation. Now, a weak yen is a consumption tax, essentially, and so it makes that worse. And so any kind of government that's coming to power, their incentive is to put a floor on the yen.